tariffs. Tariffs is the buzzword right now. ENERGY. Energy entering the market. That's all it is. And when we're talking about energy, we're talking about people with an opinion that they've gotten from somewhere. Tariffs, quantitative easing. We've had a lot of terms over the years if you've been doing this long enough. All it matters, all it works out to at the end of the day is energy, because it's news that gets someone to make an opinion about the market that they want to go put money on. They are going to either initiate a new trade or they're going to unwind an old trade. We're not trying to predict what the announcement means. We don't care. All we care about is the contraction and the expansion of markets. That's all we care about. The energy just means there's more people willing to drive the contraction and the expansion behavior in the market. It's going to go faster and it's going to get bigger. That's all it means. You get the narrowing of markets, the consolidation. That's the consolidation of beliefs and understandings or what people think is going to happen. Consolidation of opinions. All that consolidates into a point where the market doesn't budge. And then when somebody pushes it out of that range, they tip the scale just a little bit, then you start getting that expansion activity that comes out of that box, of that contraction zone. And when that activity hits, whether it is news or whatever has pushed it, something has pushed people or bots that are programmed by people, has pushed them to make a decision, get some sort of bias in their mind that they're going to either start a new trade or unwind an old trade that is going to create transactional volume in the market that is going to cause price movement. When that price movement hits, it will create imbalance and inefficiencies that will cause the price to trend up, trend down, and go into a ever bigger expansion until the market chooses to travel up to higher prices or down to lower prices and start the process over and over again. And that's the way it goes. Energy just makes it go faster. And that's what we're seeing here on euro dollar. So if we look at the daily, and I'm just going to probably keep it to the actually, you know what, let's do a quick top down and see where we're at on the monthly. I'm not going to go up past that. Okay, so monthly's getting up towards the top of this previous range that we were stuck in for a good while, right? We dipped down, now we're back up. We're at fair market value that's been back here, I think, since like 2015. Yeah. Let's jump down to the weekly. When we look at this box, we want to ask, how is this communicating with the overall market framework? If we look at this minor box here, why does this breakout make sense coming up to here and then what we're getting right here? And I don't expect you guys to answer, but I'll give you the answer. These are the questions that you want to ask. This box makes sense because when it's put in context with this box, you understand that this has been nothing but the master pattern, multi-leg expansion, happening in all markets on all time frames all the time. When we get an aggressive breakout and it reaches up to here, this is unsurprising because we still have a gravitational pull to this fair market value that the market chose a long time ago. When we ran out of juice to fuel the market going down here, we ran out of sellers. It's going to go back to the gravitational pull, fair market value, the center of gravity, where those neutral beliefs were established to begin with. That's what happened here. And now this move is breaking us through that fair market value, reaching up for the swing high liquidity. There's a pretty good chance, not a guarantee, but there's a good chance that this candle over the next few weeks will come out and take out liquidity up here. Then what happens after that? We'll probably get maybe some sort of stall, maybe, or we'll see. It might hang out up here and then start its run potentially up to this fair market value. We'll have to see. But what we know now is that we got a gravitational pull back to this fair market value. We've now blown through that, and we're working our way up to the swing high liquidity. And that's what we got. There's nothing surprising about any of this here when you put it in the context of the true market framework, which is contraction, expansion, fair market value, and overbought, oversold around those levels. Nothing here is surprising. So it'll be surprising to all the people that were betting on what they think the tariffs mean and the news mean. They had a heck of a day yesterday trading this. Day traders, there were being funerals being held today for day traders that died yesterday. All right. Like this right here is Widowmaker trader stuff right here, man. Um, if they don't understand what they're dealing with, and a lot of this will draw a lot of traders in. The worst thing that could happen, man, is that somebody got paid on in this candle right here on a, trading a 1 minute chart, trading in that news. That's the worst thing that could happen because all that does is it makes them think that that is a sustainable strategy. It's the worst place to be in because you're literally the next news announcement, you're probably going to lose all of it plus some, or get completely cleaned out. You don't want to build confidence in trading stuff like this during news as a short-term trader. You really don't, because you're playing with fire. It's just my opinion. So, but when this news came out, people are trying to digest that. What does this mean? What should I go long? Should I go short? So they have their opinion of the fundamentals of that mean, and then they're looking at the price action to either justify whether that opinion's good or not. And at the end of the day, all that is noise. It doesn't really matter because the market is simply going to contract and expand. And it's going, no matter what people's opinions are, the market is going to seek out liquidity. So, what their opinion is right this moment doesn't really matter. It might be the triggering of the energy coming into the market, but what really matters is where's their pain threshold and where's their stop loss, because that is immediately where the market's going to revert to seek out the liquidity to do what it needs to do for the bigger players in the higher time frames. And that's it. That's the only thing that matters. So when news is coming out, we want to be aware to the best of our ability that that is going to happen. We want to know that that energy is going to be injected into the market. We for sure want to know that, but it does not change any way of how we analyze the market. The weekly is long. The daily was short, but we had a pretty aggressive move yesterday, bringing it long here, coming out of the news there. So we expected when the daily went short right here, we are expecting that as long as the weekly holds long, that this run is going to be short-lived. We know that it's only a matter of time before we flip and get on the other side of the ATS trend line. And we started flirting with that here, in this box area that we've been in for a few days. All this kind of price action anxiety that's been happening leading up to this tariff stuff, right? But if you're looking at the weekly, you know that the weekly is stronger than the daily, and the weekly is pretty strong to the upside. And also the monthly is pointed up as well. Those are more powerful than the daily. So if you're trading the 30-minute to the daily, you're expecting that at some point, as long as the weekly and the monthly hold long, the daily will follow suit. It's pretty much guaranteed as long as those time frames are still aimed in this direction. Looking at what's happened here, here's where that news hits. Here's a lot of people jump this candle as it breaks long. A lot of people. What does the market do though? It sucks back very rapidly and runs down to this range down here. Why? Why wouldn't it just break long? Everyone says, okay, we think the market's going up. Everyone gets in long, and then they just continually stack on top of each other. Why can't it just do that? Why can't it do that? Is because there hasn't been an adequate opportunity for the banks to adjust their portfolio. There has, and more importantly, there's been a situation where there's been a edge that has been presented to the banks to make money, which is what they're all about. That's their entire reason for existence, is to exploit this edge. So if they can throw people off to get them to jump this news long, they know that there's a pain threshold down below this breakout level right here. Why? Because it was neutral up until this point, and then you had a big move up, go up, and then that is making people want to jump in. You go from neutral to showing them something that induces an opinion. And then next thing you know, they act on that opinion. And when they do that, that energy comes to the market. It creates the other side of that opinion, which is a stop loss. A stop loss, the market makers and the banks love stop losses because it's guaranteed transactional liquidity versus excitement. There's not really a good way to measure that. If someone's going to create a promotional campaign for a stock, yes, it can have it pump, which is cool, but there's really you don't know how many people are actually going to come in. Versus when it comes to forex and it comes to dealing in these ranges, the guaranteed liquidity that you know is in play is the stop losses. And you know that it's going to be unlocked because of people's pain response to being out of the money. The stop loss is the most guaranteed place that the banks can drive the market to or induce it to go to get what they need, which is liquidity. You cannot make money on billions and billions of dollars without sufficient liquidity and the ability to accumulate that. So their entire existence, their entire strategy is based around unlocking and exploiting that liquidity pocket. It has to be. Otherwise, they cannot make a profit. So when we see activity like this as ATS traders, this is just another day in the office for us. We have a contraction period. We have this breakout to the long side. It comes and runs down through the bottom of that box, which will then start triggering selling in the form of stop losses and also in the form of new beliefs born that the market's going to continually drop now. That is harvested for the banks for a little while here, and then it goes off in the direction that everyone originally thought it was going to go. And this is nothing more than a very, very fast multi-leg expansion, something we've been studying, teaching for years now. That's all it is. You just have witnessed an extreme amount of energy coming in and pushing that agenda very fast. This you want to leave alone. This initial release, unless you're significantly in the money, you want to be careful with this stuff. But the way this framework was set up, which is one of my favorite signals right now on the ATS Assistant, is the momentum stacking indicator. We have a box right here, a green box. We have the expansion line formed right in here for this box right here, and then we establish a box right here with the expansion. That gives us our momentum stacking. Notice that it is now stacking up. You could see that turn has happened. It's represented by the regression line that's showing us, okay, sentiment has shifted from down to up. And I'm more interested in up at this point because the daily and the weekly, the daily's already kind of like flirting with the ATS trend line, and the weekly is still strong to the upside. So I'm much more interested in an up momentum stacking versus a down. So you already have that right here. As the market trades down, you trade to that previous belief level right here associated with this box. You trade down through there. They use that to accumulate because they're accumulating based off of how they have manipulated beliefs from this level right here. They're able to trade that back down, knowing that if they break it below this belief barrier right here, this tipping point, then that could actually start to work against them. So they know they could drive it down to this point, to that rung on the ladder, and then boost it back up in the predictable direction. Now, if you're in tune with the weekly and the monthly directions, the overall follow through of this move for however many pips, few hundred pips here or more, the follow through on that is not surprising because the weekly has been telling you this for weeks. We know that energy is going to hit in a moment. That energy is going to hit. It's going to be digested. And then the way that contraction, expansion, and energy blasts into the market is likely to play out is in what direction? The stronger time frame directions. But if you are looking at a situation like this and you are zoning in on a 1 minute chart during this news announcement, all you're looking at is these crazy whips that are happening and you're losing sight of the big picture. And that's where you get destroyed. And that's where most day traders are living. They take something that could be a great opportunity and they try to dice it up in there because they think that's what they're supposed to do, and they leave uh, an opportunity like this being, out of business. Just thought it was a good example of how energy coming into the market in a very predictable way, how it translates into the master pattern and the three market phases playing out and how you can exploit that.